And welcome once again to Investor's Edge. I'm Adam Sarhan, in for Gary Kay, who's out today. Today is Tuesday, January 27th, 2026. As you know, we have a lot happening in the market. Great show for you tonight. We want to thank you very much for being here. Before we dive into the fun stuff and share Gary's thoughts and my thoughts and all that fun stuff, just some housekeeping notes about the show. This is a show about you and your money and all the fun points in between. Just a quick reminder, if you don't get the show in your city, you can go to GaryK.com. You can listen live or archive. We are live Monday through Friday, 6 to 7 p.m. Eastern. Also at GaryK.com, you can follow Gary on X, formerly known as Twitter, by just pressing the button, or his handle is his name, and then his name, Gary Kaltbaum. Also at GaryK.com, you can subscribe to Gary's morning notes sent directly to your inbox for free. You may email Gary, ask about his money management services, or if you want his premium service, you can join convictionleaders.com. Once again, that's convictionleaders.com. He shares actionable ideas with you, multiple updates every day, pretty much daily webcasts, weekend webcasts, where not only do you listen to Gary like you do here on the radio, but there you can actually see the charts and see everything he's showing. So all of that's available with a free trial at convictionleaders.com. All right, a few thoughts here. Let me just do my job and make sure that I convey the messages from Gary directly to you right at the top of the show to make sure I don't miss anything. We have, let's see, Gary is saying all right, United Health, UNH, gap down today. That was a big drainer on the Dow, and we'll go into that in a second, but it's just earnings, right? It's companies report earnings every quarter. We're going to get winners. We're going to get losers. Lots of things to look for during earnings season. The most important thing that I look for is how the stock reacts to the news, and that's my take on it. But I'll keep reading what Gary sent me to make sure I convey the message, then I'll go into details. So UNH, gaps down on earnings, drags the Dow down. It was down about 20%, I believe it was today. So it's a big move, 19%, almost 20%. So that was a big reason why the Dow was lagging today. Now, outside of that, another big semiconductor update today and a storage day. And they're moving them right into earnings reports. So they're moving up before earnings. Stocks like KLAC broke out today. Corning broke out today. GM gapped up and broke out on earnings, so on and so forth. But I'll get into that in a second too. So Gary wanted me to share those 2 points. At UNH, we've got semiconductors, data storage stocks are moving, and they're moving before earnings. Next, the NASDAQ and the NASDAQ 100 on the verge of breaking out of a long base, but we'll need help from earnings from the big cap tech stocks that are reporting later this week. A lot of them are bouncing at least the last 3 days. So if you look at Apple, you look at Microsoft, you look at NVIDIA, you look at Meta, a lot of them were beaten down. Like Amazon was below the 50-day. It is still below the 50-day moving average. Microsoft below the 50-day moving average. Amazon was below it, but the last week or so it got back above it. Let's see here. Google's acting fine, no problem there. Broadcom is below the 50-day moving average. Meta is below it's actually below its 200-day moving average. Facebook. Tesla is below its 50-day moving average. Berkshire not Berkshire. Hold on a second here. Wrong one. Okay, Q's. Here we go. Let's see. What else did I want to show you? Palantir, PLTR. They're below the 50-day moving average. Netflix way below the 50 and the 200-day moving average. So these are all big cap, stocks in the Nasdaq 100, and they're big weighted in the Nasdaq 100. And lots of these guys are just sold. They fell a lot, and they just have been lagging. But now they're starting to bounce, and that's a big reason why the Nasdaq's coming up and leading a day like today. We're getting money rotating back into these names, especially some of these beaten down names that have been lagging for a while. All right, so watching that. Those are the messages from Gary. I want to make sure I get that out there. And now I can give you the rest of my thoughts on the market. All right, so when you zoom out, one of the biggest things that I look for is I want to see the forest, not just the trees. And when you look at the forest, it's really important to say, oh, okay, here's what's important. Here's the trend. Here's, be aligned with the trend. Here's what's happened. And most importantly, we look to the right of the chart. What are the odds favor about what's going to happen next? Because that's where we make our money. What happens next, right? So, okay, let's go ahead and take a look at it. We have the NASDAQ 100 pretty much I think it's less than 1% below an all-time high. I tweeted this morning having, let's see here. Yeah, it was 0.5. I mean, it's a fraction of a percent, let's just put it that way, below its all-time high. And that's the QQQ. So the NASDAQ 100 is about to break out and hit fresh record highs. It's 0.9%. So less than 1% below an all-time high. Let's just keep it super simple. The S&P 500, same thing, a fraction of 1% below an all-time high. So you have the S&P 500 pretty much at an all-time high, the NASDAQ 100 less than 1% below an all-time high, and lots of the other indices just hit all-time highs recently, especially the small caps and the mid-cap stocks. They already broke out and they're leading. So this year, 2026, for now, it's still a strong year. We had a very strong rally from April's low last year after the tariff tantrum or the scare. And then the market just went ripped higher from April up until October. And then over the last few months in the fourth quarter of 25 into now January of 26, the market's just been going sideways. This is the Qs, the S&P, some of the smaller indices and the mid caps, they already broke out. But the S&P 500 and the NASDAQ 100 are both just going sideways to consolidate a very big run. And that, folks, is healthy when you zoom out. When you have a market that pretty much had every chance in the world to fall, I mean, just this month alone has been major headline after major headline after major headline. The Venezuela, then Greenland, then the trade this and the tariffs and blah, 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 all this stuff happening. And the market refuses to budge. That tells me pretty much everything I need to know. Now, tomorrow we have the Fed meeting, the first one for 2026. And we have lots of big earnings in the next 48 hours. A lot of the big cap stocks, these big tech stocks specifically, are reporting earnings. The reaction to the news is just as important, if not more important for me than the news itself. Why? Because it tells me what the big investors are doing with their money, not just what they say on TV or whatever, what they say on the news. No, it's like, what are they actually buying? What are they selling? What are they doing? That's the money. What shows up on your statement? Price. Everything else, the fundamentals, the earnings, the valuations, the analyst opinions, all that, it's important, sure, but it doesn't show up on the statement. The price is what shows up, and that determines whether we win or lose, how we do, all that fun stuff. So we're in a situation where the environment remains strong. We have not fallen. We had every chance in the world to fall. And instead of falling, what's happened? The market's just perched near all-time highs. While we've had several stocks go through some decent pullbacks and corrections. The software, like Gary's been on like white on rice. Software stocks have been going down. Like ServiceNow is a good example, right? Apple had a big decline recently. Meta below the 200-day, right? Netflix getting hit pretty hard. But the market just goes sideways. To me, that tells me it's a matter of when, not if, we break out, hit new highs. Now, of course, that's bearing some unforeseen event not occurring. In other words, we have a big negative event, or some outlier event occurs. Yeah, the market can easily go down. But the fact that we haven't gone down, to me, is a bullish event. That's the main point that I want to convey, because that tells me that the market's strong, number one. Number two, it tells me that the environment, forget the news, it's the reaction to this. The environment continues to be strong. The tailwind is the market's back. The market's has every chance it could fall. It's not falling. So that's important. The other thing is earnings. As we go through earnings season, and I'll cover a lot more in detail here in the next few minutes as we go forward, but I just want to, again, big picture, is zoom out and say, okay, what does the market expect to happen? More importantly, what actually happens? How does the stock react to the earnings? Like a UNH gapping down 20% in a day, no bueno, to put it nicely. That's not a good sign. Now, they could beat their estimates. They could raise guidance. All I care about is what? The stock's reaction. Stock's down 20%. I don't care about anything else. To me, that tells me everything I need to know. It trumps everything else. And then the reaction to the news, also very important. But not just that. how's the stock performing? Is the stock in an uptrend? Is the stock in a downtrend? Is the stock, acting healthy? Is it above the 50-day? Is it below the 50-day? So on and so forth. So putting all the pieces together, that tells me everything I need to know about putting the probability. It's all about the odds and the probability of what happens next. That said, we've got a lot more to cover. I'm Adam Sarhan. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. I'm Adam Sarhan in for Gary Kay, who's out today. In case you missed any part of the show, you can go to GaryK.com, listen live or archive. In this case, you can listen to the archive. You can rewind it, fast forward at your convenience on any device you want. All right, so we spoke about the market, gave you some notes from Gary. Next, our earnings season. Spoke about earnings. We're in the middle of, we're in the thick of earnings season right now. And as we go through, you're going to see lots of different events occur. I'm going to try to use my words here carefully. And our job is just to stack the odds of success in our favor, really just make sense of what's happening, interpret the data, right? So I always like to say the market is speaking and then ask, are you listening? Well, how does the market speak? It's not verbal, it's nonverbal communication. The way the market speaks to us is by doing this, by moving, right? By going up, by going down. Think of, in fact, most human communication, I was told, is nonverbal. Think about how most people communicate. The market's not going to come up and say, hey, I'm going higher. No, but if you see a lot of stocks, if you see them moving up, if you see the major indices perched near all-time highs, you see the small caps and mid caps break out and hit new all-time highs. All that happened in the last few weeks. And you've seen a lot of geopolitical headlines and a lot of this and that. Every reason in the world for the market to fall. Instead, we're rallying. Or at least moving sideways. That tells me, folks, the action is, for now, it's very, very healthy. So a few things. One, how do I watch the market or pay attention to what's happening? I built a tool. It's called marketterminal.com. Feel free to go take a free trial to it. This is my tool, something I built, where it helps me make sense of the market. First thing it does is it gives me stocks breaking out in real time. So all day, every day, I can see how many stocks are breaking out. A day like today, for example, we had 43 stocks break out. Okay, so I want to go through, and I sort it by market cap. So I go through and say, okay, what are some of those stocks that broke out? This is how the market speaks to me, right? KLAC, we spoke about this earlier, broke out today, hit a new high. Corning, GLW is a ticker there, broke out, nice gap up today. I think it was up about 15%, broke out of a nice base on heavy volume. Good action there. Next, SYY, big move, breaking out of, 3 and 6, 7, 8 day trading range. Good action there. General Motors, GM, nice breakout there of a multi-month base. Little bit of a choppiness. It tried to break out back in early January. It pulled back a little bit and then bounced off the 50, and now it broke out today. Brasilia, I can't pronounce it. Petrobras is the ticker, PBR. So Petrobras, there you go. I think it had some Portuguese name at the beginning of this thing, but Petrobras is the ticker. PBR is the ticker, oil and gas, huge oil and gas company. Big breakout there, 13.62 and then 14.89. Then you've got, let's see, what else can share with you that broke out today that caught my attention. ING. Broke out today. And again, these aren't buy recommendations. No investment advice is being given. All this is just me wanting to be able to go out there and see the action in real time. All this updates in real time. Barclays, BCS broke out today. ING broke out today. And then I look for themes, right? I want to find, do we see it like recently in the last few weeks? There's a lot of gold stocks break out, a lot of silver stocks breaking out, right? Today I'm seeing international banks break out. ING is a European bank. Barclays, BCS, breaking out today, European bank. UBS, breaking out today, European bank, Swiss bank. Deutsche Bank, German bank, breaking out today, ticker symbol DB, right? So I have 43 stocks breaking out, and a bunch of them are European banks. All right, that's the market speaking. It doesn't, and again, this takes me 2 seconds now. We have complicated algorithms and advanced, blah, 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 AI, and we do all this kind of, it took me 3 years to build this thing, but finally it's available. It's the way that I'd like to see the market make sense out of it. So we get the breakouts sorted by market cap, and I can go through every day and see, really what's happening in real time. I've got other banks that are breaking out too. I have a Japanese bank, MFG broke out today. Let's see, what else jumped out at me today? New Bank, NU broke out today. This is a Brazilian and Mexican company. Let's see here. Other stocks besides banks broke out too. We had, let's see, a pharmaceutical biotech company broke out today, so on and so forth. So that was KNSA. Let's see, AVT, little breakout there. So again, just want to see what's happening. Now, before the stock breaks out, it's setting up to break out. Well, all right, I want to see that too. So I added a section called setups. So I could see today we've got 30 high-ranked setups. And you've got setups by large cap stocks, small and mid cap setups, whatever it is that you want to focus on, by all means. But for me, I want to find stocks that are setting up before they break out. So we've got something like Royal Bank of Canada, Merck, MRK, big pharmaceutical company or healthcare company, GEV. This is GE Vernova. They do nuclear power. Very, very powerful, pardon the pun there, business. They power data centers and it's nuclear. I mean, we know it. AI needs power. There's an electric grid shortage there's the electric grid in the U.S. It's been 40, 50 years since it's been upgraded. It needs an upgrade. And GEV does that. And it's a spinoff of GE. FedEx is setting up to break out. CN is setting up to break out. TD Bank in Toronto Dominion Bank is setting up to break out or just about breaking out. I can go through on and on and on and on, but there's so many of these things that, okay, I want to see the stocks before they break out. So that's a setup section. Next, we've got breakdowns, which is the opposite of breakouts. Like UNH, for example, was a breakdown today. Humana Healthcare, HUM, gap down today and broke down below support. CVS, big gap down today on the United Health news. So again, putting the pieces together, that makes sense. Here's what's happening, right? PINS, P-I-N-S, Pinterest, gap down and broke down today. So there's breakouts and there's breakdowns. So that's really helpful for me. Then we've got movers. Today we had 394 stocks that moved up. If a stock's up over 3%, I have it here as moving up. Down, we have 242. So we had 394, almost 400 up and about 250 down. I'm rounding. All right. That tells me more stocks were up today than were down. That's big, right? Volume movers, I can sort by that. Stocks that gap up and gap down. We had 22 stocks gap up today, about 19 that gap down. All that's available. I mean, these are just tabs. You just click on it and boom, right on Market Terminal. Now, extended hours. I want to see extended hours breakouts, extended hours breakdowns available. I was tired, like right now we're in the heart of earnings season. We'd have 20, 30, 40, 50 companies report earnings, big movers, this and the other thing. I had no idea for decades, what was happening until the open, and really a few minutes after the open because I had to manually scan for it. I'm like, well, now we've got the data available. Let me go out there and look at it. So stocks like today, right now it's after hours. I've got FFIV, which is F5, up about 11% after hours. I've got NXT, Next Tracker, up a bit, same thing, up nicely after hours. So you can easily make sense of what's happening. So up next, we've got a lot more to cover. I'm Adam Sarhan. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. In case you're just joining us or missed any part of the show, you can go to GaryK.com, rewind, fast forward at your convenience 24/7 on any device, all for free. So, spoke about the earnings season, spoke about the market, spoke about how I look at the market. I got a lot of questions. How do you do it? What are you looking for? This, that, and the other thing. I want to make sense out of it, and I want to really just listen to the market. And how do I do that? By staying objective. It's important. Keep your emotions at bay and focus on price action. Organize the data any way that works for you. I do it based on a way that works for me, and I built marketterminal.com to help other people see it the way that it works for me. I just keep things super simple, folks. However you structure this, any way you want, I coach a lot of people. I talk to a lot of investors, traders, and professionals, individuals. Same thing. I mean, it's over and over and over again, right? Human nature doesn't change. People with a plan, people that are disciplined, people that can actually follow their plan, tend to outperform those that don't have a plan and just wing it in almost any endeavor. It's not a hard rule. It's just a generality. Okay, what's your plan? I ask investors all the time. Well, I look. One guy told me today, he's like, I watch CNBC. I'm like, okay, you happy with your results in the market? He goes, no. It's okay. Well, what are you doing? Do something different. I mean, to me, it's obvious, but I was doing that too. I've been there. I know how it feels. Make emotional decisions. I mean, I have a book. It's called Psychological Analysis. The whole idea there is fundamental and technical analysis, in my humble opinion, is not enough to beat the market. If it was, everybody would own a few islands in the Caribbean. Something's missing. I've studied these super successful people, and they make rational, not emotional decisions with their money. That's the whole point of the book. And it was #1 at Amazon every day for 3 months. And thank you all that supported it and leaving nice reviews on it. It's very helpful to other people. And the idea is have structure. How do you look at markets? Here's my structure, and I built Market Terminal. Okay, great. I want to see the action. Simplify. They teach our kids to simplify fractions. Here you go. Here's how I simplify it. Up, down. Extended hours. Right now, we're in the middle of earnings season. Every day we're going to have hundreds of stocks report earnings. Okay, I want to see those stocks, and I want to see what's up and what's down. So I've got an extended hours section, which tells me extended hour stocks up, extended hour stocks down. And I'll go through and read some of them to you now. Breakouts, breakdowns, up, down. The left side of the screen is to help you find ideas. The right side is to research those ideas. So extended hours up. We've got NXT. We've got Texas Instruments up nicely after reporting earnings. NXPI up nicely after reporting earnings. MCHP, Microchip Technology, up nicely. Sweet Green up a little bit in the after hours session. That could change by the open tomorrow. But that's what I have as of now. LRN also up a little bit. Extended hours. No, that's up more. MANH is still right after the close. It's still a fluid situation. TRMB is another one that looks like it's up after hours. So those are some of the after hours movers up. After hours movers down, BVC, which is Santec Holdings, CRML, it's a thinner trader, QRVO, that's down. It's probably going to be a breakdown tomorrow or a gap down tomorrow. Skyworks, SWKS, another one that's down big. GEF, down big. Weatherford International, WFRD, down big in the after hours. And VENU. That was a small cap one, but it's down decently after hours. And that's what I do as far as organizing the data. We've got after hours breakouts, after hours breakdowns, after hours movers. Again, up, down. Super simple. Next, we've got strongest stocks. You know how you can go on a weekly chart, monthly chart, annual chart? Well, we've got those, but I want to see the strongest stocks on the daily, the day, the week, the month, and the year. Same with the weakest. What are the weakest ones this year? I told you I speak to investors all the time. I ask them all the time, what's the strongest stock in the market right now? And I'm asking you the same question. Don't worry, can't hear you, so you can answer. You can either know or not know it. Super Bowl's coming up. Everyone knows the strongest stock in their team in their sports league, baseball, basketball, soccer, football, whatever it is that you like. When it comes to markets and investing, what's the strongest stock in the market? People usually say, oh yeah, Nvidia, Apple, some whatever stock they hear in the news. They don't know the strongest performing stock in the market. I want to know it. It's IBRX, by the way. And if you want to sort it by market cap, you can do that too. You can say, hey, what are the strongest stocks by market cap? And you can look at, large cap stocks, SanDisk, SNDK, and then ticker symbol BE are some of the strongest stocks in the market this year. SanDisk, I think, is up almost triple digits this year, if I'm not mistaken. Let's see here. Almost triple digits, 92% or some crazy amount this month. It's insane. BE, insane in a good way. Another big energy stock that's up almost 50% or 60%, somewhere in that range. I think 65%, somewhere in that range so far this year. Very strong start to the year. I love to find leading stocks. because an object in motion tends to stay in motion. Newton taught us that, right? So anyway, that's the strongest and weakest. Follow the money. What are the big stocks the institutions are buying? What are stocks insiders are buying? We know there's analyst targets. What stocks are below the targets price? You got Oracle, Nvidia, CRM, Netflix is down below the target price. It's Congress. I want to see if a senator or politician owns my stock. I've got that built into here onto Market Terminal. So again, you can go through, you can see which stocks Congress are buying, which stocks Congress are selling. You've got upgrades and downgrades. You can see that. Growth. I'm a growth investor. I love finding stocks that are growing. Well, we've got stocks with strong estimates, strong growth, strong revenue acceleration, triple-digit earnings, and triple-digit growth. And again, just to give me the ideas. I'm not going to buy every single one of these. In fact, most of them I'm not going to buy, and that's okay. It's a law of nature. Most things aren't a good fit, and that's okay. Mentioned baseball. The best baseball hitters hit, 3 out of 10 pitches, and they strike out 7 out of 10? And those are the best of the best of the best. It's a law of nature. Look at an apple tree. It has 1,000 seeds. 999, I'm exaggerating just to illustrate the point, die, those seeds. One seed becomes a new tree, and nature flourishes. Because you have another 1,000 seeds, 999 die, one more becomes a new tree. It's asymmetric risk to return, folks. The same thing with trading and investing. Warren Buffett says, know your circle of competence. Know it really well. And learn to say no. The more you can say no, the better, the stronger you are. There's value stocks, there's value criteria, there's growth at a reasonable price, income, we have dividend growers, dividend aristocrats, quality stocks, cash flow, wide moat, strong balance sheets, new highs, new lows, 52-week highs, 52-week lows. I've got all-time highs, all-time lows. I want to see stocks hitting all-time highs. How do you find that information? Should be a click of a mouse, like one button, to teach our kids to simplify fractions. Same thing here. Let's just keep it simple. Which stocks are making all-time highs? I can go through those right now. There's LRCX, Lam Research. MU, Micron. KLAC 10 Corp broke out today. AMAT, Applied Materials. ASML. NVS. These are just stocks some of them that are making. J&J, Johnson & Johnson, all-time high. APH. Corning, GLW, all-time high. So on and so forth. So as you go through the list, you can say, oh, no. Oh, that one looks good. Let me do some more research. And then on the right-hand side, right away, tell you, hey, what's the revenue? I want to be able to visualize it. Earnings, visualize it. Number of institutions that own it, visualize it. Our own proprietary ratings, very, very, very powerful. And you can go into the earnings and institutional investors, see which investors own it, valuation metrics, financials, everything's visualized. Analysts, you can see the price target, company management, the press releases, all that stuff. You want to create watch lists, you can do that. We've got AI that actually works. We've got a screener that is extremely powerful. Quote panels, if you want to put quotes up on your screen, we can do that also. Calendars, you want to see which stocks are reporting earnings and when? Here we go. Let's go, like the kids say, right? Let's go. We've got that. You've got earnings calendar. You've got there's so much to it, right? So economic calendar, earnings calendar, dividend calendar, IPO calendar, so powerful. So anyway, all that's available at Market Terminal. I'm sharing that with you in case it helps you. It helps me organize the market. You don't have to use it. You don't like it, that's great. You like it, that's great too. Another cool thing, that I have every ETF, there's an ETF holdings under markets. You can type in the QQQ. You can see every holding that ETF has, the weight of each stock in that ETF, and the impact on the ETF. Super fun stuff. So up next, just have structure, folks. That's the whole point of this, me showing you what I do. I just want you to have structure. Up next, we've got a lot more to cover. I'm Adam Sarhan. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. In case you're just joining us or missed any part of the show, you can go to GaryK.com. Rewind, fast forward, listen anytime you want for free on any device 24/7. All right, so a few things here to consider. First off, we recap the market. Second off, we talked about earnings season. Third off, we talked about having structure, which is the most important thing to look for. How do you create structure? Learn to make rational, not emotional decisions. I for years was making emotional ones. Learned pretty much made every mistake you can possibly make under the sun, and then some. Thankfully, I've had I don't know what you want to call it, but the ability, the tenacity, the desire to learn and improve and stick with it, and not give up, which is most people just tend to say, okay, it's difficult, I'm not going to do it. But no, I doubled down, went the other direction. I got to figure it out. Got to learn. I know I don't know. I've got one job in life. It's learn. It's literally the story of my life since day one, right? Even kids come out, they don't know how to walk. Okay, let's crawl. And then you can learn how to get up, fall, get up, fall, get up, fall. As long as you don't break any bones, which you don't when you're a baby walking, learning how to walk, you're fine. It's asymmetric risk to reward. One day you get up and start walking. Wow. I'll take that trade. Put that, thinking decisions as trades. But having structure where you limit the risk when wrong, and when things go right, you let the reward be maximum. Like maximize the reward, like nature, right? You have 1,000 seeds come out of an apple tree, 999 die, one becomes a new tree. That's a good trade. Even though most of those seeds died, when you're wrong, you lose one seed. Nature is wrong, they lose one seed. Okay. When it's right, it has a new tree, and then another 1,000, and then another, so on and so forth. Same thing with the market. When I'm trading and I'm investing, I want to have structure. I want to be able to take all the information, most of it's noise. Steve Jobs, Elon Musk, these brilliant minds had a great line. They said they focus on signals, not noise. And what does that mean? They focus on things that actually matter. A lot of the things in the market, it's just noise. It literally doesn't matter, which is interesting, but that's just the way it works. The market's structured that way. So my job is to say, okay, let me filter out the noise, as much noise as possible, and just focus on the signals. Price, volume, and everything else afterwards. But really price is primary. Everything else, including volume, in my world is secondary. Why? Because what shows up on your statement, right? It's price. So when you look at the market, what I like to do is have a plan when the market's closed. Now, that's nights, weekends. There's a great book written decades ago. The title of the book is How I Made $2 Million in the Market, or Trading Stocks, by Nicholas Darvis. If you go on Amazon, you type in Nicholas Darvis, or you type in How I Made $2 Million in the stock market, you'll see it. It's a great book. And in it gave a great story of how a ballroom dancer back before the internet made $2 million decades ago. And that was like maybe 20 or 30 or 50 million now, literally trading stocks without looking at anything except for charts. He would get charts mailed to him, or FedEx. At the time, it was no FedEx. At the time, it was telex to him, or whatever means that they send him the pictures. And he would just draw boxes, rectangle bases or flat bases. And he would tell his broker, here are the orders. Buy it here if it breaks out, and sell it here if the breakout fails. And then he would get the report the next day. The stock either broke out or it didn't. If it broke out, it either continued going higher or it rolled over and his stop was filled and he'd lose, let's say, one, right? Think of the seeds. One seed or $1 or 1 unit, 1% of your portfolio. Whatever it is that works for you, by all means, do it. And then he left. He was in Asia and he was doing it that way, working, very successful. Went back to New York, went into the broker's office and jumping up and down. Everybody, he thought he had a magic touch, and he started making emotional decisions and buying and selling like everybody else, listening to the crowd, and he got crushed. Why? He had a process, he had structure, and he deviated from his plan. He left. He stayed at the Plaza Hotel in New York. This was all in the story. And then he left, went to Paris, and again he was removed from the day-to-day noise. And what happened? His return, he started having phenomenal returns again. Asymmetric risk to reward. When he's wrong one. Whatever that 1 unit is for you, 1%, $10, $2, 10,000, it doesn't matter. It's all percentages. That's what matters. And what matters is the reward is greater than the risk. And when you're right, the stock could double or triple. It can go up 10%. Risk 1 when you're wrong. When you're right, make 10. However you want to do it, whatever structure works for you, by all means, I strongly recommend having a plan, and then trade your plan. Keep track of those ideas. Did I actually follow my plan? Was I disciplined enough to show up and do this, do what I said I was going to do? So me personally, I have a plan nights and weekends. I like to look at stocks. During the day I do too, but really the decisions to buy and sell I do on the weekends. And then if the stock hits my level, my predetermined level, I have an area I'm going to enter. So there's 3 magic questions I ask, and you can write this down if you want, before I buy a stock. Number 1, where am I going to enter? Number 2, where am I going to exit? Number 3, how much do I risk if I'm wrong? So again, where do I enter? Where do I exit? How much do I risk if I'm wrong? Over time, that becomes a very, very valuable tool for me to use because it forces me to have structure. It forces me to plan my trades. And then it forces me really to avoid getting caught up in the day-to-day noise because the stock shows up on TV and, oh, yeah, my friend calls me up and says, go look at this stock or whatever the case is. There's a plan. I like to have a plan. Now, some folks do really well maybe without a plan. God bless them. Good for them. All the more power to them. For me, know thyself is one of my favorite sayings. Know thyself. Adam, I need structure. I need a plan. Otherwise, I'm not going to follow it. And my performance, it's very clear when I trade with a plan, when I trade without a plan. Just like what happened with Darvis and many other folks. So the point of this is to help you share this with you so it can help you as well. And ask yourself, what's your plan? And this is a business of intelligence, right? It's not, the smartest guys in the world are richest guys in the world. No. In fact, the universe rewards action, not just intelligence. Intelligent action is what I say it is. But you can have the smartest guys in the world can't trade their way out of a paper bag. Got doctors, lawyers, accountants, all that kind of stuff. It's the discipline to follow through. The emotional, emotions, controlling those emotions and learning how to make rational ones. So I think that's all the time we have for today. As always, I want to thank you very much for being here. This is the one and only Investor's Edge.